verified nuclear-backed electricity with full traceability. And in today's session, we'll highlight how EFECs are advancing procurement strategies that sustain energy grid decarbonization amid growing demand. Additionally, we will also share how registry and marketplace infrastructure is expanding access and enabling adoption at scale. So to start, as a way of introduction, my name is Catherine Doyle, Senior Vice President, Head of the Registry Business. I'm responsible for business development, product design, and customer success teams for Xpansiv Registries, which is the largest registry ecosystem worldwide today. By way of background, I hail from the financial services industry. I've led Guardian Life's customer service technology division. I've also held roles in the Office of the COO at Guardian, Office of the CEO at AXA Equitable and American Express. Here with me today is my colleague, Russell Karras, who is the Senior Vice President, Head of the Strategic Market Solutions Division at Xpansiv. He leads business development and product management for Xpansiv's exchange services, portfolio management system known as Xpansiv Connect, and data business. The team focuses on developing and scaling carbon and renewable energy markets, managing strategic customers and partnerships, as well as enhancing trade execution and risk management systems. Prior to Xpansiv, Russell spent about a decade at the CME Group overseeing the environmental and North American crude and refined businesses. So welcome, Russell. Also joining us today from Constellation is Whitney Bowles, Managing Director of Customer Products. Whitney leads the teams that develop and manage energy products for Constellation's commercial and industrial customers. She previously helped customers meet their sustainability goals through Constellation's offsite renewable solutions and brings valuable experience from her background in energy law. Whitney, we're very glad to have you here today on the panel to share Constellation's perspective on bringing nuclear energy to market. As a brief introduction to Xpansiv, Xpansiv is a global market infrastructure provider focused on scaling the energy transition through digital environmental commodities. It operates the world's largest spot exchange for environmental assets, including carbon credits, renewable energy certificates or RECs, and differentiated fuels. It also provides registry infrastructure like Xpansiv Connect and the NAR registry, along with market data, analytics services, and transaction services. Just on the next slide here, want to pause and just show a further view into our product suite and service offering today for a moment. Okay, I think we can move to the next slide. So I'm opening up the webinar with some 2025 statistics from the U.S. Energy Information Administration. So using their annual report on energy outlook, the power demand is significantly accelerating in the U.S. In fact, by 2050, it is projected to climb over 6,000 terawatt hours over the next 25 years, for a 49% increase compared to power demand today. So as such, different energy sources like nuclear will be available to support demand. And overall, entities looking to maintain their decarbonization footprint will need to address Scope 2 obligations using a range of solutions. On this next slide here, one of the main sources of electricity demand is the data centers, especially with the advent of AI adoption. In fact, data center demand is growing 4 times faster than overall electricity demand. And according to Business Insider, there's approximately 1,200 data centers across the US today. Data center demand is a primary driver for investment into 24-hour baseload power like nuclear, and nuclear can generate electricity continuously even during off-peak hours. On the following slide, over the last 18 months, data centers from Microsoft, Amazon, Meta, Google, and Constellation have been partnering or securing agreements for nuclear energy sources. Deal sizes have been ranging on the gigawatt scale, and one such deal just to draw attention to is the 20-year PPA with Constellation and Meta signed in June of 2025. As such, Xpansiv and Constellation in partnership have launched a product on the CBL platform to support transparency, traceability, and price disclosure of nuclear-based certificates. So proper registry technology is required to support off-takers and secondary markets. So registries provide the necessary foundation to track energy consumption, such as nuclear. This way, consumers interested in nuclear power in their portfolio can make better informed choices and monitor progress towards their internal targets. The general process to create a verifiable certificate based on nuclear power follows these 4 steps that you see on screen. So energy is supplied to the grid, energy is verified and reported by qualified reporting entities like a MISO or an SPP, for instance, on behalf of the facility. And when issued, the certificate is presented with an immutable serial number that provides visibility into its origin or lineage. Finally, certificates can be transferred or claim transparency with ownership always clearly defined. And as a registry provider, Xpansiv's NAR registry has a diverse portfolio to help consumers meet the needs of their own electricity portfolio demands. This year, in parallel with Russell's team, we launched a new certificate type called Zero Emission Credits, or ZECs, on NAR. ZECs represent energy generated from nuclear facilities, and so 1 megawatt of emission-free nuclear generation delivered to the grid is equivalent to one ZEC. For those of you in the audience wondering what NAR, or the North American Renewable Registry, is, it is an easy-to-use website trusted to create, track, and manage energy claims and certificates across North America. Since 2008, NAR has issued over 1 billion certificates in total, and NAR is active in almost 30 plus US states, and to date tracks about 90 plus gigs on the platform itself. With that, I'm going to turn it over to Russell to talk about bringing nuclear energy to market.
Thank you, Katie. I appreciate it. Appreciate the insight. Definitely echoing that sentiment. The need for additional registry infrastructure as firms look for better accounting around emission-free energy credits. So I think Katie fairly clearly outlined that growth in AI that's driving the increased data center infrastructure. And really, when we've discussed with customers, partners and generators and firms on the demand side, whether they're consultants that are looking to service corporate customers or integrated energy companies looking to service retail energy customers, we hear more and more about nuclear power, but also about the EFEC credits, and firms that are looking for a way to reduce their scope 2 emissions, in addition to looking at renewable energy or structuring PPAs. So we've partnered with Constellation to launch a standalone spot contract that focuses on EFECs. So we can move to the next slide. So what are EFECs? Again, these will be on our CBL marketplace, which was one of those icons that Katie showed at the beginning. We're a vertically integrated company. We touch every part of the life cycle for an environmental commodity, such as a renewable energy credit or an EFEC credit. So we have the registry, we have portfolio management systems, aggregation systems, and then we have the exchange. So again, working with Constellation and the broader market participants, we discovered that there was a real demand to have a contract based on this. And we'll run through where we see EFECs in the product life cycle and why there is such demand at this time. Obviously, the number one reason is there's a demand, firms looking for more optionality and access to nuclear certificates, and also from an accounting standpoint. So if we move to the next. So just some kind of nuts and bolts around the details on how we're thinking about tradable instruments. So our first tradable instrument will be focused on the PJM EFECs. Now, EFECs technically will include really any clean emission emission-free energy source. So not just nuclear credits, but you could also have wind and solar and hydro. Traditionally, it's nuclear credits that get delivered through these mechanisms. So right now we spent the better part of this year, we're always speaking to clients on what sort of tradable instruments are useful based on, whether they're compliance markets, and we're trying to match policy developments like we did earlier this year with our Maryland instrument, but also on the voluntary side as well. What types of credits can we offer? What kind of different structures or portfolios or baskets of credits can we include in products? But right now, we're really we have the contract specs, we have the launch date of December 2nd, and we're firming up first trades for that day, and also onboarding quite a few of new participants who would like to use an exchange to access these credits for the first time. It's just a standard transaction fee of 2 cents for the EFECs, and also we'll follow our standard unit size that many are familiar in the rec market today. Again, we are a spot exchange, so we do facilitate settlement of offtake agreements, but these will all be listed in real time as spot transactions through our platform. So if we can move to the next slide. So we think about different markets, and Katie mentioned I was at CME Group, which is one of the largest commodity exchanges in the world, and we had the most mature commodity markets in the world. So I managed WTI, which was a very liquid contract, traded a million contracts a day, had a bid-ask spread of 1 tick wide, and had funds and natural players like oil companies and merchant traders, had asset managers, retail firms, proprietary trading firms. Really was the gold standard of a global benchmark as the most actively traded commodity. That's going to be all the way down to the right. And then we have other markets that, at Xpansiv that we're looking at today, things like hydrogen, where we're at the very early stages, where we're still thinking about what should registry infrastructure look like? What would a spec look like? Who are the actual buyers and sellers as firms are developing production, and then firms are thinking through how they're going to purchase that commodity. So, I personally experienced kind of the full life cycle here at different areas, but it could be oil, it could be nuclear credits, it could be renewable energy, it could be differentiated natural gas. And again, the advantage of working at Xpansiv is that we tend to take part at the bleeding edge or in a lot of new markets, but we have products that meet all these different classifications. But you have to start with the very basic fundamentals of identifying buyers and sellers, finding firms that are going to provide liquidity in this market. In the early days, you tend to have opaque pricing and fragmented liquidity. And EFECs have lived in this area for some time. This isn't necessarily new that EFECs exist, but what's new is that we have customers, and obviously Constellation is one of those who has publicly said we want to support. How do we move EFECs from this early day section down to this transformative area? And the first place you do that is with an on-screen physical market, ideally, where you go from opaque pricing to now let's put that price in the market. Let's open up that supply. We'll still need direct sales, of course, but how do we open that up to a much broader range? And that price discovery should take place ideally on an open and competitive platform like one that we offer today through our CBL exchange. So once you take that first step, and it is a challenging first step, despite that this is a known market, our sales team has spent considerable time leading up to launch, and now that we have the launch date and we're really starting to organize first trades, providing education to the market. And as every conversation we have could spur new trading ideas. Is a firm using this for a direct end buyer? Will they buy and hold it for a prospective future sale, or because they have a view on where the market will go in the future? Should they bundle it with another product that they have today, where maybe it's a PPA that has an EFEC bundled with it? Maybe it's a basket of different environmental products that includes carbon and renewable energy. Maybe an EFEC would be part of that as well. I think, especially when we think about retail energy firms are starting to think more of this. And when you launch a product and you have consistent price history, you have firm trades that you can point to, That's going to help catalyze those decisions and move the use cases really to the forefront and bring them to market. Once you get those transactions going and you have pooled liquidity, that's when we can start to think about standardized contracts. So if we start with PJM, how do we move to knee pool? How do we introduce NAR as assets are registered? How do we move to a U.S. EFEC contract? Do we move to international EFECs through the IRAC standard? That's where we want to get to, and then you get to that point of futures contracts like we have on some of our voluntary carbon products, like are supported through many of the rec markets that we have through different exchanges. And as I mentioned, are the most actively traded commodities all have those futures in the end. So we're excited to take this really important next step in moving to the transformative stage. So we can move to the next slide. So there's different ways when we start these markets. And again, we're not starting in that state of maturity. We'll list the futures and everything will be traded on screen. At Xpansiv, we have a variety of different ways that we offer liquidity. So I'll go through a few of these today that all interact with our platform and are meant to, again, concentrate liquidity, centralize liquidity, facilitate price discovery, help ease settlement, and also expand kind of the addressable market for customers with Xpansiv sitting in the middle of those trades. But we also, within the Xpansiv umbrella, have a variety of brokerage services, like boots on the ground that are advising corporate customers, like our Carbon Financial Services group is working with end buyers to help secure credits and figure out net zero strategies, and EFECs will play a role in that. We also have Evolution Markets. It's one of the largest environmental brokers for derivative contracts, who is also active in the uranium market that is looking to provide support and help customers with EFEC purchases and managing risk around EFECs. So we have a variety of kind of boots on the ground brokerage services that are looking to help provide liquidity in this market. But that's all driving towards getting it to the point of, once the deal is finalized and executed, then how do we put that through an exchange where you could still get that price on discovery, which is where we have that OTC cleared transactions. It's really physically settled transactions that are privately negotiated and then reported into our system. We have direct on-screen execution. Again, this would be the easiest way, the most mature market. We will have screen markets up on EFECs. This is really useful for, as firms are investigating, I want to be able to go see that there's a firm bid and offer up on the screen, so I can help inform my decision of when and how much of the EFECs I may want to purchase. And then you also want that price history to see how that changes over time. So we will definitely encourage direct screen execution in addition to more brokered transactions that are submitted into the platform as what we call a reported trade, which is most like a block trade in the futures market. We also are looking to introduce all of our screen offers, bids and offers today are firm on the platform. It's why we've built Xpansiv, and we have APIs that run through all the infrastructure layers that Katie displayed at the beginning. If you list an EFEC and you buy it, you need to have enough cash. Those credits are encumbered in the system. It's an instant transfer. It's efficient, but firms need flexibility. So we have other means in addition to the brokerage services. We have things like that we're introducing, like requests for quotes, where you can put out an indicative bid or offer. And we're working on a few different platforms that we'll introduce for the US rec market and for EFECs down the line. But again, it's another way where how can we have electronic on-screen communication, the price discovery process, but with maybe a little bit flexibility, which is really conducive to newer markets, at least for tradable instruments for areas like EFECs. So I think I mentioned, phase one, this really isn't our first phase. We've been working on feedback for the better part of this year, thinking through the structure, making sure there was the right demand for the product. But now we are marching towards that first trade date, and that's really just the start of the journey. Then we work to get consistent liquidity on the screen. We build that price history. We have many firms that will then take this in for internal approvals. They'll be able to start offering it to their corporate clients. So this is something that's going to build over time. And we believe, again, driven by that data center demand outlined by Kay at the beginning, that this is going to be something that we see grow linear over time. And as we move up and we get that history and more trade execution, we want to incorporate more registries. We want to think through more creative products and broader contracts, broader products as well, to the point where we can get to a benchmark status. So I'll pass it over there to Whitney to discuss Constellation. Thank you.
Sounds good. Thanks, Russell. So as Russell mentioned in one of those slides, Constellation is the nation's #1 provider of clean energy. And I don't know how many folks on the phone are familiar with Constellation, so I just wanted to kind of level set and run down a little bit of background on us. So we're responsible for about 10% of all emissions-free energy in the US. We operate in 48 states and the District of Columbia, and we serve approximately 2 million customers from residential to large commercial and industrial. We also serve approximately 3/4 of the Fortune 100. So, we are, as I mentioned, the nation's largest clean energy provider. We take a lot of pride in that. And in addition to producing all of those clean megawatt hours, clean megawatts, we are 14,000 plus employees strong, and we invest in the communities around us as well. So with that, we can go to the next slide. So just talking about EFECs, right? So EFECs are not new. They've been around for a while. We have, had customers that have, bought the EFEC product for a while. But this is kind of an opportunity through CBL markets to provide a kind of another avenue for customers as well. And we found EFECs to be a really cost-effective an effective tool for businesses that are aiming to reduce their GHG emissions. And that's regardless of where a customer is on their sustainability roadmap, or if they don't have a sustainability roadmap at all and they're really just starting. EFECs can help businesses just kind of reduce their carbon footprint by supporting emissions-free generation sources. They can be used to match all or a portion of a company's usage on an annual basis when we're talking about annual EFECs. And they also allow businesses to align with market-based emissions accounting principles. As we think about kind of nuclear, as Russell mentioned, the EFEC category can be broader than nuclear, but many and most of the attributes that are kind of sourced as EFECs come from nuclear generation. And as we think about nuclear energy and its importance, it's only growing in importance on the grid. Nuclear generation makes up nearly 1/3 of all electricity and over 82% of all zero carbon electricity produced in PJM. So an additional benefit, in addition to supporting emissions-free generating sources, supporting nuclear, having kind of an easy entry point for customers, an additional benefit is that there's no requirement of space on site to make an EFEC purchase. Sometimes customers will are looking into various options, including on-site solutions, and EFECs don't require kind of the space that you would need for some of those solutions, which make them a really good entry point for companies that are looking toward, helping kind of reduce their emissions and helping them meet their sustainability goals. So with that, we can go to the next slide. So this slide, there's a lot happening, I appreciate. But really, I just wanted to illustrate that Constellation offers customers a suite of sustainability products, and EFECs are a step along that continuum. For many customers, as I mentioned, annual EFECs are a really good entry point into their sustainability purchases. And the CBL platform is offering a platform on which those annual EFECs can be purchased and used to match all or a portion of a customer's annual usage through those purchases. As customers look for longer term certainty or more temporally matched solutions and options, or structures that are tailored to meet their specific needs. They may move to longer term bundled or structured products that are a little bit more customized. Constellation kind of offers the range, but to help customers meet their goals. But we're really excited that this kind of new avenue through CBL Exchange is going to be available to customers to provide even more purchasing options. So we kind of like to be a partner, along the way for customers, but it's great to have this new opportunity for customers to access these EFECs, which we've seen kind of gain in popularity, have been in high demand, over the years. So with that, I think I'll turn it back to Katie to take us to questions.
Whitney. Thank you, Whitney. That was a really enlightening presentation. I have some questions from the audience, questions for both Whitney and Russell. So, I'm going to start actually, Russell, with you. The first question that I'm seeing is, what will the price be for the product?
So again, we are entering the price discovery process. I would say these tend to trade, from $1.50 to $2.50. So we'll be somewhere in that range, I think, when we open up and start trading. We're looking at structuring some deals ahead of the first day of trading, but then we're also really excited to get these prices up and screen and let the market kind of dictate on a daily basis. We'll see how much price fluctuation there is then. But I would expect to see it in that range.
Excellent. I actually have another pricing question for you. From the audience, I have, how does nuclear certificate pricing compare to RECs?
Well, I think, as Whitney pointed out, it's generally the more cost-effective solution. So we generally see it trading just below kind of like a voluntary REC today in the market. Again, if you're comparing, apples to apples, the same vintage year, of course, if you have older RECs, you may dip below like a current EFEC value. But it'll be interesting to see from some of our early conversations, thinking about, firms that may provide these to retail customers as they start to bundle those together with other REC products. How does that impact the price of EFECs as well?
No, it is early days and interested to see how it develops. I think I have a final question for you, Russell, before I turn it over to Whitney for a few. What volume is available at launch, and if you could talk a little bit about how it will scale?
Sure. Well, we've generally seen we see demand that could be range from 50,000 EFECs all the way up to the millions, and it's been really enlightening for us because we didn't have that lens into the EFEC world. But as we've talked to customers and they're getting demand on their side for EFECs that could be bundled with things like PPAs, it has been surprising about the potential large size of some of the orders. But then it's a very broad market. And I think, no one knows that better than Whitney and Constellation, who've been selling a variety of energy services for years, and they're the largest to do so. But we also, throughout our network, have a extensive kind of diversity in our customer mix. So we'll see firms coming in looking for 25, 50K, and then we'll also see some larger customers looking for to fulfill PPAs more in like the seven figures. And then once it becomes more of a tradable instrument, then that gets even more interesting, and you'll see some different needs and different quantities. And if you get to things where there's a derivative product off of that, then you start kind of matching the quantity with futures. But to start, we have firms looking at like bigger contracts and how they help fulfill those using EFECs, and those will be much larger in size. But then we have also firms that are looking like, how do I service corporate demand? There's someone that's looking to meet their net zero target, looking at scope 2. And you have corporates of all sizes. You can get more down to like the 50K mark for those.
Excellent. Okay, thank you, Russell. I have a round of questions now for Whitney, as she joins us here. Hi, Whitney. So the first question is, how are customers incorporating EFECs into their portfolios today?
Yeah, no, that's a great question, Katie. And as I mentioned, customers often, there's a continuum, right? So for customers that are kind of at the beginning of their journey, it might be that annual EFECs are a good way to start. So they're looking to reduce their GHG emissions, trying to figure out a good entry point. And so matching their usage with EFECs on an annual basis is often a kind of a good place to start along their sustainability journey or start kind of with their sustainability purchases. And for some customers, annual EFECs are exactly what they need, and they don't need kind of to deviate and go to other solutions. And for others, just depending on kind of what their goals are, what they're trying to accomplish, they may kind of go from annual EFECs to kind of different bundled products or longer term that specifically meet their needs. But like I said, for a lot of customers, annual EFECs are a good entry point, and for some, it's kind of what they need, for the longer term.
That makes a lot of sense, and I actually think it kind of it segues a bit to the next question I have here for you. What's the biggest opportunity as nuclear certificates become available?
Yeah, I mean, for us at Constellation, nuclear we've always appreciated the role that nuclear plays in the grid, and that, the carbon-free kind of generation that it provides offers kind of to the whole kind of market as well. So it's great to see that there is more interest, and others are kind of seeing what we've always seen. I think with EFECs being and kind of nuclear-based certificates being more widely available, it just opens up the possibilities for purchasing and options and products for customers. So it's really exciting to see, increasing kind of the liquidity that will happen kind of through this CBL exchange is great, because we want people kind of to see that this is a product that really could meet their needs, that is available to them, and is something that they should consider and kind of be, purchased more often, I guess I would say.
Yes, great. And then my final question, Whitney, for you is around demand. Do you see demand driven by policy, or is the demand coming from deeper market forces, in your opinion?
We've really seen demand increase over the years, and a lot of it is coming from kind of a company's, particular goals. So it's not necessarily what's happening in the policy sphere. They've seen kind of the importance of clean energy solutions, to their kind of bottom line, to their kind of overall procurement, to sustainability, and have, seen sustainability options starting kind of with annual EFECs and others as a good opportunity to kind of meet the goals that they have set for themselves, if they're thinking about, how they can support low emission or no emission generation. So, what we've seen is that, the interest has really developed, the market has kind of really started developing, so that customers are not as dependent on kind of what the policy priority is of the moment, but are thinking on a longer term, how these kind of products like annual EFECs can benefit them as they think about kind of their journeys through the future.
That also makes a lot of sense. And at this point, Whitney,
Katie, I just wanted to.
Of course, yeah, jump in.
I think the interesting thing around the policy side is that it really has kind of a undertone bipartisan support from both sides. So for the right, I think, has long supported nuclear power, thinks of it more like a traditional sense, and on the left side, we think about more environmental conservation. It is emission free. It's clean energy. So it's interesting that it's not as widely debated as coal and maybe nat gas more in the middle, and then you have like solar and wind. It's not always debated in that same realm. It kind of sits underneath, quietly crossing crossing the aisle. So we feel like it's well positioned. I mean, I've personally been supportive of nuclear energy for a long time. I'm more of a macro, but now that we need every option, like this is unprecedented power demand that we're seeing. It's not like this is a recent trend. Like this is new to a lot of even people that are like veterans in the power sector today. If you look at recent history, so we're going to need and if especially we think about the hyperscalers are going to adhere to Scope 2 targets, and you're going to have firms that are building data centers that are at the forefront of making these claims and kind of pushing the envelope of meeting environmental goals. You're getting to this crossroad where you're going to have this demand growth, and you're going to have like fewer and fewer of options on how to get there. So it seems like this is a really good time and a good opportunity to introduce EFEC credits. So just wanted to say that on the policy side as well, because it's something interesting that we've seen as we've dug in, and that's been emerging across different customer types, but also different partners in the space as well.
Yeah, that's a great point, Russell. We have long kind of at Constellation understood kind of the benefits of nuclear and how important kind of nuclear energy is to the grid from a reliability perspective, from kind of a zero emission perspective. But we have seen that we have bipartisan support, right? That nuclear energy has bipartisan support, and people are starting to see how important it is to us as we kind of move into the future with this increase in demand from kind of AI and data centers. So it's becoming kind of ever more important. And we have support from kind of various, sides of the conversation, and definitely kind of across aisles and in a bipartisan fashion, for nuclear energy. So it's been great to kind of see others come along and see how important nuclear is, and how beneficial it can be kind of for them and their goals. And it's been nice to see that we've had support from many sides.
Can I ask one more question on my side? And we keep saying annual EFECs. There's a movement driven by some of the leaders in the space to look at things like hourly RECs. This one. I mean, Katie, well, I know your experience with this on the registry side, but Whitney, do we think that we'll need to get to hourly EFECs as this market advances, or do you see it following the path of renewable energy credits in the future, or do you think it stays on its own more of on an annual basis?
No, I mean, I think we've already seen customers that are interested in hourly matching, right? And we have kind of solutions and products for customers that are looking for kind of that next level of granularity. So it is, something that's continuing to develop. Interest is continuing to develop. We do see customers that are moving in that direction, both kind of long-term, but also kind of matching on a more temporal basis, trying to match kind of their hours, their usage on an hourly basis with the certificates that they buy. So I don't see it just staying kind of in annual. I see, like I said, it's a continuum. Annual, it can be a good entry point. It could be, for some customers, that's what they need. But for others, it is kind of that more hourly match solution that better meets their needs, and acknowledges that, there are some hours where you're not going to have, everything, all of your power is not on. And so they want to make sure that they are supporting the grid in different hours with clean solutions.
Yep, and in short, I'll kind of go back to where I started, with the EIA power sales, right? Entities are going to have to look to maintain their decarbonization footprint and address their Scope 2 obligations. And so there's going to be a range of solutions out there to do so, hourly being one of them. And I think, at this point, kind of, I want to just make sure no closing remarks from either you, Russell, or Whitney before I wrap it up. Okay, so I do think Great questions, really critical insights, both from Whitney and Russell. So I appreciate the thought leadership that you shared here with the session today. And I also want to thank folks for joining, for the audience for joining. I hope that you gained quite a bit of insight on how organizations are procuring verified nuclear-backed electricity with full data transparency. We will be sharing a recording following this event, so look out for that in your inboxes. Thank you, everyone. Have a great day.
Thank you.